In today's episode, we're going to talk about no tax on tips. And check this out. If there is anything else within this bill that you'd like for me to cover on this podcast, please make sure that you let me know. Okay? This podcast is about you and making sure that you understand your taxes and how you are affected.
Welcome to the Tax Relief with Timalyn Bowen's podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowen's is America's favorite EA.
Hey, family. Welcome to episode 65 of the Tax Relief with Timalyn Bowen's podcast. Thank you so much to the listeners who tune in every other week to take in the content and tax education that I'm giving out. I appreciate you so much, and there's no way in the world that I could be doing this since April 8th of 2022 without you. So, typically on this podcast, I talk about different tax relief options and what to do if you get in tax trouble, but I also believe in preventative care, and I also am on a personal mission to fill the tax literacy gap one taxpayer at a time. That's why right now we are in a series covering the One Big Beautiful Bill Act, which was signed into law by President Trump on July 4th of this year. So last episode, we talked about no tax on overtime. In today's episode, we're going to talk about no tax on tips. And check this out. If there is anything else within this bill that you'd like for me to cover on this podcast, please make sure that you let me know. Okay? This podcast is about you and making sure that you understand your taxes and how you are affected. All right. So let's get right into this episode with no tax on tips. When people were initially talking about this before the bill was actually signed, there were a lot of misconceptions such as tips, would not be taxable income at all. That is incorrect. Tips are still considered taxable income, but what the One Big Beautiful Act did was created a new section in the law, Section 224, that will allow up to a $25,000 deduction on qualified tips. Now, we're going to talk about what qualified tips are in a little bit, but I want to point out with this $25,000, you can only imagine the amount of people who are going to be making up tips to get these different deductions and things. So with the $25,000, that is the maximum deduction. And again, it has to be qualified tips. The tip also is going to have to be voluntary and is going to have to be reported to the IRS. Again, we'll get to that in a little bit more detail shortly. Now, everybody's not going to be able to take advantage of this, okay? So when we're figuring out who qualifies for it as far as money is concerned, we are basing this on the modified adjusted gross income. Now, adjusted gross income is going to be your gross income, and then we're going to subtract out the deductions that we see on Schedule 1, such as like HSA contributions, traditional retirement contributions, student loan interest payments, those types of things. Well, modified adjusted gross income is a little bit different, and it can be calculated differently for different credits or deductions. So for this one specifically, and also for the overtime deduction, the modified adjusted gross income is going to be calculated by starting with the adjusted gross income and then adding back any income that was taken away to figure in adjusted gross income that was due to the foreign income exclusion, or there's a list of specific countries. Okay. So let's say, for example, we have somebody who is working overseas. Okay. They were gone 330 days out of the year. So they qualify for the foreign income exclusion. They're a bona fide resident somewhere else. When figuring this out for their modified adjusted gross income, if they were able to exclude any income from a foreign country, we would have to add that back in to figure out their modified adjusted gross income. Okay. So for single filers, they can take the full $25,000 deduction if their modified adjusted gross income is $149,999. Okay, it begins to phase out at $150,000. Now, that $150,000 is going to double to $300,000 for married taxpayers filing jointly. All right, but the deduction doesn't double, it stays at $25,000. Now, if their modified adjusted gross income goes above the 150 for single filers or above 300,000 for married filing jointly, they don't automatically get disqualified from taking the deduction. Instead, for every $1,000 over the limit, the deduction is reduced by $100. So let's say we have somebody who's a single filer, they got $25,000 in qualified tips, but their modified adjusted gross income is $155,000. So that's $5,000 over the limit. So their deduction is going to be reduced by $500. You see how we did that? 5,000 over for each thousand over, reduced by 100. So we get the 500. So for them, with that reduction, they wouldn't be able to take the full $25,000. Instead, their deduction would be $24,500. Okay. Now, as I said earlier, $25,000 is the max if the taxpayer received that much in qualified tips. The taxpayer can deduct up to $25,000, but they're going to be limited by the amount of qualified tips they actually received. So if your client only received $10,000 in qualified tips, no, they can't deduct $25,000. They can deduct the $10,000 that they received. Okay. Now, I want to point out, for taxpayers who are head of household, yes, they still qualify to take this deduction. They will be looking at a modified adjusted gross income of $150,000. But for taxpayers who are married and file separate, this deduction is not going to be available to them. Okay. Now, even though the bill was signed into law in July of 2025, we're going to go back and include this year. So this deduction is going to be for the tax year 2025, but it's not going to be permanent. The last year that somebody will be able to take advantage of this bill is going to be 2028. So it's available through this tax year through December 31st of 2028, which will be filed in 2029. Okay. So let's take a look at what qualified tips are. These are going to be cash tips that are going to be received by an individual that is in an occupation which customarily and regularly receive tips on or before December 31st, 2024, as provided by the Secretary of the Treasury. What does that mean? That means people can't just start asking you to tip their employees so they can take advantage of this deduction. Instead, this is for people who are already getting tips, such as waitresses, hostess, your bellhop at a hotel, your Lyft driver, your barber, your stylist, your nail tech. Okay. Now, this can get a little murky as far as who customarily and regularly receive tips. So, what the IRS is going to do, and we're anticipating this list on October 2nd, they're going to release a list of occupations which customarily and regularly receive tips. So if you want to know if you made the cut, make sure you're checking out the IRS newsroom on October 2nd. Okay. Now, as far as cash tips, another myth that I heard is that everybody's going to have to be carrying cash to tip people so they can take advantage of this deduction. That's actually incorrect. Cash tips are going to include tips from customers that are paid in cash or if they're charged. So if you're a waitress and you usually receive your tips via credit card, that is okay. That is still going to qualify as a cash tip for this deduction, and also any tips received in a tip sharing arrangement. Okay. So again, people who customarily and regularly receive tips. So barbering, your nail tech, your esthetician, people who provide, deliver, or serve food or beverages. So my interpretation of that is that we're going to see our DoorDash and Uber Eats people on that list as well, right? Because they literally are making money by delivering food for your consumption. Maybe you're making money delivering food for consumption. So when we take all of that into consideration, who's going to actually track these qualified tips? Because remember, I said they have to be voluntary, which brings me to another point. If you are a server and you are serving a table of 6, at some restaurants it's 8, and that service charge of 18% or the gratuity of 18% is automatically added, that won't qualify for this deduction because it's not voluntary. The customers are being required to pay that. So I'm really interested in how restaurants will handle that over the next few years to make sure that their servers can qualify for the tip. Okay. But as I was saying, who's going to be tracking these qualified tips? It is actually Congress has put that responsibility on the employer or the third party system who's receiving payments. So you should be able to see the amount of your qualified tips on your W-2 if you're a wage earner, on a 1099K. So if you were working and taking payments via credit card, you want to make sure that your clients are noting that certain things are tips. You should be able to pull it on a 1099 NEC if you're a contractor versus being an employee. And then for people who file Form 4137 to report tips that were unreported for Social Security and Medicare tax, that form also can be used to track qualified tips. Now, check this out. This deduction is also going to be available for self-employed taxpayers. So if you have your own barbershop, you can still win with this deduction, but you are limited in a way even more than wage earners. Wage earners can take the full amount of qualified tips that they earned if it's under $25,000 and their modified adjusted gross income is under the threshold. However, if you are self-employed, you are going to be limited to the amount of net income that you have. So let's say, for example, 2025 was a rough year. You received $15,000 in qualified tips, but your business netted $5,000. Well, you're going to only be able to take a $5,000 tip deduction because the tip deduction cannot take you into a loss. Okay, so that is one thing to note. Self-employed people, you can take advantage of this deduction, but only to the extent that you had net income in your business. Even if, again, your modified adjusted gross income is under the threshold and you're not to the full $25,000. Now, something else to be noted, you will be required to have a social security number in order to take advantage of this deduction. And with the social security number, it has to be one that's administered by the Social Security Administration prior to the due date of the return that you were filing. So next year, the tax returns are due April 15th, 2026. That means for the 2025 tax return, you have to have a Social Security number that is administered by the Social Security Administration prior to April 15th to be able to take advantage of this deduction. Okay. Now, I know I gave you a whole lot right there. I was talking with another enrolled agent this week with the overtime deduction going into effect this year, the no tax on tips deduction going into effect this year. So many moving parts. This really isn't the year to have your cousin or your nephew Tommy do your taxes. Okay. So you all know me. It doesn't have to be me, but make sure you get the help that you need, all right? You need to go to a trustworthy tax professional to have them prepare your taxes if you are affected by any of these new deductions, because you want to make sure that they are doing it correct and that you're working with somebody who is going to ethically do your calculations. Because what we saw during COVID with all of those different tax changes were people getting taken advantage of because there were people finagling different deductions and credits to make refunds higher. You don't want to be put in that position, or else you'll be coming right back here to get tax relief because you have a tax bill that you can't handle. Okay? I don't want that to be you. Couple of more announcements before I let you go. Just as a reminder, next month, September 15th, is the extension deadline for the partnerships and S Corp returns. The following month, October 15th, is the extension deadline for the corporate returns and also for the individual returns. Now, if you're in the bluegrass state with me in Kentucky, we had a federal disaster in February where the flooding was horrible. The whole state was declared a disaster area, and you have until November 3rd to get those filed. Remember, even if you have a balance that you can't pay in full yet, make sure that you get the taxes filed on time so you don't have to deal with an unnecessary failure to file penalty. Okay, that can be up to 25% of the tax owed if you have a balance. All right. Now, thank you so much for tuning in. I can't wait to see you all in 2 weeks for episode 66. As always, I appreciate you, and I would appreciate if you share this episode with your friends and family, because you would help me on my personal mission to fill the tax literacy gap one taxpayer at a time. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.